China, Elon Musk raised alarm about Bitcoin energy use. Here's how it could be made more green. China cracking down on Bitcoin mining and Elon Musk suspending Tesla's acceptance of Bitcoin due to the large amounts of energy it takes to mine have both contributed to the cryptocurrency losing almost half its value from its high of over $64,000 in April. Here's why Bitcoin uses so much energy and a few ways Bitcoin mining could be more eco-conscious, according to experts. Bitcoin's main sustainability issue is the huge amount of energy used in Bitcoin mining. To verify transactions, miners must solve extremely complex math problems, essentially by trial and error, which requires complex computer systems and a large amount of computational power. Right now, millions of Bitcoin mining devices around the world are generating 130 quintillion of such guesses every second of the day non-stop. Combined, these machines are now consuming as much electrical energy as a country like the Netherlands, says Alex de Vries, a financial economist who runs Digiconomist. That is why energy consumption usually grows or shrinks when Bitcoin respectively gains or loses value, says Mark Bevand, a computer security expert who developed the original methodology for the Cambridge Bitcoin Electricity Consumption Index. Those monster computer systems also pose an issue. The other half problem is the large-scale and frequent machinery replacement for supporting high-intensive mining activities. Production and disposal of those electronic machineries are emission-intensive, says Dabo Guan, chair in Climate Change Economics Department of Earth System Science, Tsinghua University, Beijing, China. The problem with using so much electricity is that energy generated by burning fossil fuel releases greenhouse gases into the atmosphere, which then cause climate change. So while transitioning Bitcoin mining use renewable energy may not reduce the overall energy consumption, it could reduce the use of fossil fuels. A research paper published by Guan and colleagues in April showed, for instance, that the energy consumption of the Bitcoin blockchain in China was expected to generate an amount of greenhouse gas emissions equivalent to the yearly output of the Czech Republic or Qatar. Jesse Morris, CEO of nonprofit Energy Web, says most estimates find 20% to 50% of Bitcoin is powered by renewable energy, but all available numbers are based on self-reported data, which is unverifiable. Bitcoin miners in China, for instance, are known to use both fossil fuel and hydroelectric energy, the most common renewable energy by Bitcoin miners. But since the Chinese government started cracking down on Bitcoin mining, many miners are leaving and heading to Texas, among other potential new homes. The Crypto Climate Accord, a group working to make the cryptocurrency industry powered by 100% renewable energy, is building software that would allow miners to anonymously report the amount and kind of power they are using, says Morris. Others, like DeVries, are skeptical that Bitcoin miners would voluntarily be transparent about their energy usage. I don't expect more openness from Bitcoin miners directly as the amount of illegal mining activities is growing rapidly, he says. Still, some, like Bevand, say that Bitcoin will naturally transition to clean energy as it becomes cheaper than electricity that releases carbon emissions. Sustainability of Bitcoin mining is a problem that will solve itself because of technological trends. But fundamentally, powering mining with renewable energy is a short-term solution of debatable worth, says Guan. Since carbon emissions are triggered by mining activities, implementing a carbon tax on miners would be an effective way to motivate greener mining activities, says Guan. A carbon tax would potentially make mining Bitcoin less attractive, DeVries says. This, in turn, reduces the amount of money earned by miners and how much they spend on energy-hungry machines, so reducing the climate impact as well, he says. First, there would need to be an independent standard for tracking emissions associated with cryptocurrencies, a paper published on June 18, The True Costs of Digital Currencies, Exploring Impact Beyond Energy Use, suggests. The paper, of which DeVries is an author, says the cryptocurrency industry could use some iteration of the Greenhouse Gas Protocol, which is an international cooperatively designed accounting standard for tracking greenhouse gas emissions in the public and private sectors. Mining operations can be moved with relative ease and miners could simply relocate to jurisdictions where a carbon tax isn't implemented, says Peter Wall, the CEO of Argo Blockchain. Also, it would be inappropriate to levy a carbon tax on Bitcoin before other parts of the economy, Morris says. Bitcoin was created to operate with what's called a proof of work mechanism, which results in high energy consumption mining. With proof of work, the system selects, for a Bitcoin reward, the first miner who solves an energy-intensive computation, Bevand says. So the more work, or computational power, a miner puts in, the more chance of getting Bitcoin. Proof of stake organizes the cryptocurrency based on how much of the currency a user owns, not based on which miner solved a problem. But with proof of stake, there is no computation, so it requires no energy expenditure, Bevand says.